Before I get into what you should buy, though, you need to understand one of my cardinal rules, why nobody ever does make a dime panicking. What really occurs? What's the schematic that makes it so it's always right? Well, reason number one is good things can still happen, something people always overlook, though that's hard for anyone to acknowledge into the teeth of the selling. The drug companies are using very sophisticated methods these days that allow them to blast out new vaccines and new treatments at an unbelievable blistering pace. Artificial intelligence has rapidly accelerated the vaccine development process. It takes days, what used to take months or even years to do. Yet the sellers on Friday acted like this new variant somehow had Pfizer and Moderna totally on the ropes, just stumped, even as they hadn't even said anything yet. I mean, that's fear pulling the trigger, not rationality. Second, the governments around the world had to act decisively because most of them were viewed as too slow the first time. However, that didn't mean we get the dreaded lockdown here, even as that was on every seller's breath. My advice, get some Listerine. Sure, we'll have more mask mandates, and they'll only be obeyed by people who are already vaccinated. I know. Maybe we'll bring back some social distancing, but if it gets bad enough, an actual lockdown, not in the cards. Please know that, not in the cards. That means we'll likely have a robust market, but it's not the kind of thing that should trigger, a huge decline, especially given how oversold stocks were coming in. Hence, no panic. No, don't buy, don't panic. And I don't know how many times I can say it. If I don't, there's a lot of things that I have to just address in the investment club. And this is a key tenet, as I put out when I did several bulletins on Friday, telling you not to panic. I'm glad I did that. Third reason not to panic, today's action. Now, we have seen repeated comeback rallies, some which last only to the morning, others that lasted all day, gave you ample prices that were higher than what you got on any day one of the sell-off like today. Some of that's just buy the dip philosophy at work, but a lot of it comes from recognition, pattern recognition, that the market overshot on Friday because trading was too thin, couldn't handle all the selling. Hey, speaking of thin, let me give you really the best example, and that's West Texas crude. It was around $80 a week ago. Our president led a coordinated round of strategic petroleum reserve sales to tamp down the price. No dice. Didn't work at all. Bulls that lapped it up, stocks went higher. But one day of the Omicron variant took oil down to 68. Member of the U.S. government, go buy back that strategic reserve oil. It's a good short. Might not go lower.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.